Where do you sense we are in the inflation fight at the moment? I mean, most traders are expecting another 25 basis points from the Fed, but do you feel the scene is increasingly getting set for a pause?
So in our views, we do agree that the Fed is likely to hike 25 basis points in its upcoming meeting, and they're likely to pause at least a little bit over the summertime to really sort of evaluate the fallout from the banking crisis that we just seen, and to see the impact on inflation and growth. But in our views, the expectation of cuts that currently is being priced in is still a little bit too positive. I think the Fed is likely to be a lot more data dependent to see how the economy is really reacting to what's been happening in terms of tightening, in terms of the banking crisis, and we'll get more details in terms of the Fed seeing where things are heading into the fall time.
Which is why that dimmer economic outlook here in the U.S., not to mention globally, is really pressuring a lot of these corporate results and the outlook, especially when it comes to the semiconductor side of things. And you see the results from SK Hynix as well. They expect a rebound. But when it comes to the broader demand out there, whether it's from these corporations, when it comes to IT spending, when it comes to the broader tech sector, how cautious are you?
So we're still, again, a little bit negative on that side. We do agree there's a lot of struggles when it comes to the semiconductor, the tech sector. It has been in a little bit of a down cycle for a little bit. And given, the upcoming demand globally, it's likely to deteriorate further. We are sort of preferring to stay more defensive when it comes to equities, to really stay in those large cap consumer staples, healthcare, to really sort of ride out the current headwinds.
Do you like anything in Japan, given that we, of course, are very much watching what the BOJ does?
So in terms of equities, we're a bit negative on Japan, given the earning hasn't been doing too good. A sentiment in terms of the investor flows that we're seeing, it's really more into the selling territories at this point, and investors have been sitting on quite a bit of overweight. So there is a bit of a risk of unwind. And in terms of the BOJ upcoming meeting, we don't think they're likely to do anything in terms of yield control. So what that means is that there's going to be headwinds, at least in the near term, for both the yen and the equity side of things for Japan.
You're long Asia, emerging markets as well, but do you feel that perhaps some emerging markets in Asia in particular have got the boost that you might have hoped for from the China reopening trade?
So in our views, we do like EM Asia, given that the overall positioning and flows from investors have been quite resilient, despite we're facing a bit of a more challenging risk environment. We specifically prefer a little bit more on the South Asia, Southeast Asia, ASEAN region compared to North Asia, which, to the earlier point, in terms of tech cycle, in terms of more geopolitical pressure on North Asia is a bit more. But to the South side, we have positive carry. We have, less geopolitical impact, and also in terms of the trade linkages with China, it's more on the manufacturing goods side. So we are a little bit more positive on the ASEAN side of things.